confident are you that the Fed chair right now has his pulse and his finger on the financial risks that we are looking at moving forward?
We'd be in line with what the Fed comments that came out of Jackson Hole. We think the U.S. economy is in very strong footing and look for 1 or 2 rate hikes the remainder of the year and more rate hikes as they continue to normalize next year. As we look across the U.S. economy, one of the headwinds that we see people facing is the unemployment rate is getting down low, and it's being more difficult to hire. So we expect that we're going to start to see some wage pressure, and that is in line with them continuing to raise rates as we go into next year.
So the wage pressure pushing inflation up further?
Starting to push inflation, and you're starting to see in the Midwest economies, you're down below 3% unemployment in some of the states. So that would be a driver of continued wage pressure as we go forward.
The big question mark, of course, is also central bank policy. We know the Fed, they have been very clear in their messaging, but there are still other questions about what happens when the other central banks who have already kind of messaged the tightening, they start to push further, what that means for rising rates. How are you viewing that environment right now?
I think if we start to see the other central banks start to unwind, maybe we could start to see a little steepening of the yield curve. That's one of the headwinds we've seen year to date, is the yield curve in the U.S. has really flattened out as the short end has come up, and the long end has stayed around the 280 level, around where it was at the end of last year. So maybe we start to see some steepening in the yield curve as the other banks start to unwind a little bit.